Hello, everyone. My name is Nana Ama Sarfo, and I'm a contributing editor with Tax Notes. Thank you so much for joining us today for the fifth part of our joint webinar and paper series with the International Tax and Investment Center. The ITIC is an independent research and education nonprofit that was founded in 1993 to promote tax reform and help improve the investment climate in developing economies. And they coordinated a series of 8 papers looking at how governments can respond to fiscal challenges post-COVID-19, all of which have been published by Tax Notes International. Now, economic recovery from COVID-19 is likely to be one of the greatest challenges of our time. The IMF is estimating that the pandemic will cause a $28 trillion loss in output over the next 5 years. Governments have been consumed with the immediate demands of the pandemic. But in the coming months, we are likely to see a shift towards long-term economic planning as governments determine how they can recharge their economies and boost their revenue after the pandemic. Now, Elizabeth Allen, who is a former official with HM Revenue and Customs in the United Kingdom, says that excise taxation could be a really good solution, particularly for developing countries. And Liz is one of the best experts in this area, having led several divisions at HMRC on excise and VAT. Amongst her roles, Liz served as head of the Excise, Stamps, and Money Business Service Improvement Division, and also as head of the VAT Collection Division. For our series, Liz wrote a really well-received paper on how governments can use excise taxes to increase revenue post-COVID-19. And today we are very thrilled to have Liz here to discuss her paper. And just as a quick note, after Liz's presentation, we will have a short Q&A session. So if you have any questions, please enter them in the Q&A box below, and we will answer them accordingly. So with that said, Liz, thank you so much for being here today. We really appreciate your time, and the floor is now yours.
Thank you very much, Amma. And good morning, good afternoon, good evening to everyone watching. And thank you to ITIC and Tax Notes International for asking me to give this webinar. Excise taxes cover a multitude of goods and services, so this can only be an overview. In drafting the paper for Tax Notes International on excise taxes, I've drawn on the work of several tax experts, and I wish to thank Professor Siebrun Knossen and former HM Customs and Excise colleague and friend David Child, and of course my husband Tony, who was also a former collector of Customs and Excise in the UK. Although I spent over 35 years working for the UK's Indirect Tax Revenue Authority, including, as Amma said, 10 years as head of either a VAT or an excise division, I have to say that I've learned so much more about each of the indirect taxes since I became a consultant and could work more closely with industry and with organizations such as the World Customs Organization, Interpol, Europol, and the OECD. Next slide, please. So today's discussion, everyone already knows that the COVID-19 virus has resulted not only in tragic loss of lives, but also in a dramatic reduction both of tax revenues and of economic development. Whilst governments have incurred large debts to pay for the lockdown compensation and to fund healthcare. The question now is what can be done to expand the narrowed tax base whilst encouraging economic development. And if the decision is to introduce new and or higher taxes, it will be important to be sure that the worst of the pandemic is past and there are green shoots of economic recovery. Otherwise, there'll be a risk of damaging or delaying the economic recovery, thus making the situation even worse. Next slide, please. So how can excise taxes help? Let's start by looking at the definition of excise taxes. I have used the OECD definition of all selective taxes on the production, sale, transfer, leasing, and delivery of goods, or on the permission to use goods or perform activities other than general taxes on goods and services. So This includes taxes on tobacco products, alcoholic beverages and hydrocarbon oils, on luxuries, sugar-sweetened beverages, or junk food products, and on some services where the aim is to influence behaviours or solely to gain revenue. Historically, excise taxes have been levied primarily to gain revenue, but nowadays they're levied both to obtain revenue and to influence social, environmental, and health behaviours. And as a former administrator, I know that however brilliantly conceived tax policies are, if they're not implemented effectively, they will not produce the expected tax revenues. However, implementation of new and increased taxes and the special nature of administrative controls on excisable goods and services is a topic worthy of another paper and webinar. So in the interest of brevity, I'm not proposing to venture into this specialist territory today. Next slide, please. So whilst I do not pretend to be an economist, I found in my research that the IMF in its government finance statistics has estimated that excise taxes in most emerging economies account for about 10% of total tax revenues. So it is worth considering whether there is scope, A, for new excise taxes that the public can accept, and B, is there scope to improve compliance with existing tax legislation? And around the world, there are examples of new excise taxes, such as tax on plastic bags and the recently introduced range of sugar taxes. So yes, there must be scope for introducing more socially acceptable excise taxes. However, excise taxes can never be the prime consumption tax revenue earner for a government because they fall on a narrow range of goods and services that are not necessarily consumed by the majority of the population. Though road fuels have until very recently been consumed by the majority of citizens in most countries. And yes, in my view, there is always scope to improve compliance with existing tax regulations through an analysis and understanding of current tax gaps, accompanied by improved customs and revenue administration and a risk-based approach to compliance. Next slide, please. Usually, when talking about excises, people think first of all of the traditional sin taxes. Let's look in more detail at the sort of excise taxes we have here. Tobacco products, alcoholic beverages, fuel oils and gambling. And as I said, although initially most of these were introduced to raise revenue, nowadays there is a dual function. The intention has been to cover at least the cost of externalities such as healthcare, or for fuel oils as a proxy for road use. But the focus of these taxes has changed over recent years as governments are aiming to nudge consumers to stop smoking, to drink and gamble in moderation, and to move away from the consumption of fuel oils. The tax rates of these sin taxes have increased to high levels in many countries. So the question we now need to ask is, the scope for any further increases? And if so, what will we do to compensate for these revenues in future if consumers switch to the recently developed less harmful products, such as heat-not-burn cigarettes and e-cigarettes, and from fuel oils to electrically powered vehicles? And another thought occurred to me. If smoking tobacco products is harmful, why don't we all tax hand-rolling tobacco and cigars at the same rate as cigarettes instead of at a lower rate? There cannot be any justification for allowing these other tobacco products with similarly harmful effects to be taxed at a lower rate. And I'll return to talking about taxation of innovative products later on. Next slide, please. So we now have a new generation of sin taxes. Over recent years, there have been significant shifts in pressures on governments to use taxation to tackle a number of problems in our 21st century societies. Obesity, plastic waste polluting our rivers and oceans as well as our landscapes, polluting emissions, including in particular by road transport vehicles. I've not added air travel to the list as the travel industry has suffered so badly following the COVID lockdowns, and no one wants to make things worse by levying new or higher taxes on this trade sector. However, a range of modern sin taxes has now emerged, and I will talk in more detail about some of these later. Next slide, please. And then we have other goods and services. The only areas of services deemed a traditional sin tax is gambling duty, because of course it can be addictive. Many countries, particularly emerging economies, tax luxury goods, but the tax policy theorists consider luxury should be taxed as part of a VAT regime, which is naturally based on sale price. Either way, because of the ease of smuggling luxury goods, such as jewelry and gold, etc., and the availability of tax havens where the wealthy who buy yachts and aircrafts can avoid the tax, this is not likely to be an area where there are going to be massive revenue gains. Financial services are usually exempted from VAT, but can be subject to excise taxes. There can also be a separate insurance premium tax. Another tax sector that's been taxed is the public utility services, such as suppliers of gas and or electricity for industrial or domestic use. And then in some emerging economies, telecom services are taxed. Now, these have proved to have positive externalities in emerging economies. So why should they be subject to excise tax? Next slide, please. Now on to one of the new sin taxes, food and beverage products. This is an area where, in order to reduce levels of obesity, particularly in young people, the World Health Organization advocated a tax on sugar-sweetened beverages. Many countries have implemented a sugar tax or sugar levy. Additionally, a few countries have also tried to tax what we know as junk food. So far, the results from these countries with a sugar tax have not reflected reduced obesity. And perhaps this is because there are many substitute products available to consumers. What has also been happening is that in some countries, there's been widespread consultation with industry to encourage not just the producers of sugar-sweetened beverages, but other food and beverage manufacturers to reduce the levels of sugar and salt in their products. I'm going to talk a bit about the one I know best, and that's the UK sugar levy, which came into force long after the initial consultation and announcement of intent. The particular system introduced in the UK has been a tiered system with 3 rates depending on the amount of added sugars in the product. As a result, manufacturers have innovated and reformulated products so as to have some sugar-sweetened beverages subject to no tax or to a lower rate of tax on the market alongside their more highly taxed original products. This move has been deemed successful in the UK, with both industry and the government pleased with the innovations. However, there's still been no impact recognised so far on the level of obesity in the population. So, will there be moves to tax other food and beverage products? And to my mind, this is a very difficult area. But of course, it might be one that citizens are ready to accept, especially knowing that nowadays that one of the difficulties with the likelihood of getting COVID-19 is that people who are obese seem to be more likely to suffer from the virus. So this might make a tax on sugar-sweetened food as well as beverages a bit more acceptable. However, such a proposal would need a clear definition that can be implemented easily by all concerned, and that in itself is a difficulty. It would also need to cover a much wider range of goods than excise taxes normally cover. And probably the tax would have to be at a comparatively low rate. Such a broad-based tax with products subject to a low tax rate would fit better within a VAT rather than an excise portfolio, to my mind. Next slide, please. Now, turning to excise duty design issues, there are two main structures for excise taxes, specific and ad valorem. The specific structure, which is usually based on weight or, for example, alcohol content in alcoholic beverages, that best reflects the harm in the product. But the tax rate will need to be revalorized in line with inflation. And that's not particularly difficult, as many countries can build this into their legislation, an automatic review with rises programmed to happen unless the government decides otherwise. Ad valorem taxes must apply to services and luxury goods. And of course, the rate is automatically revalorized in the event of inflation. If ad valorem taxes are applied to excisable goods, then the cheaper brands will benefit in comparison with the more expensive premium brands. Specific taxes are easiest to administer and control, as there are no disputes about measurements. Ad valorem taxes are more difficult to control, as they can give rise to valuation disputes and frauds. And some countries operate a mixed system, as the EU does for taxing tobacco products. This, of course, was due to a political compromise during failed efforts to achieve harmonization of tax structures and rates across the EU. And it is not recommended, since it adds complexity for all. So with new taxes aimed at improving public health and the environment, there is often pressure from lobby groups to earmark the tax for spending on health or environment-related projects. Tax theorists find earmarking undesirable because it reduces government flexibility in spending. But sometimes it is adopted by governments in an effort to sell the new tax to the public and to silence the lobby groups. Next slide, please. As I mentioned, I want to talk now a little bit about innovative products. This is fast becoming a real issue for governments to consider. And I would suggest that the post-COVID fiscal environment needs a sustainable approach. There are opportunities for higher taxes on the more harmful products to raise tax revenue and discourage consumption. And they can be combined with perhaps a lower tax rate on less harmful products to encourage consumers to switch. Combustion engines to electric-powered cars, sugar-sweetened beverages to sugar-free drinks, smoking tobacco products to heat-not-burn and vaping products. But if this proves successful and consumers are nudged away from the highly taxed original products to the lower taxed and nil taxed products, revenue will fall. So how will governments compensate for lost revenues? The UK has floated ideas about charging for road use once electric cars replace petrol vehicles. And with the growing use of artificial intelligence instead of people, the revenue from payroll taxes is falling. So governments do need new sources of revenue. Some other areas that sprang to my mind for excise taxation in the aftermath of the COVID-19 pandemic are delivery services. There's been an exponential growth in delivery services, both by supermarkets and as a result of other online shopping. Online education, controversial no doubt, and usually exempt from VAT, but consumers do save vast amounts by not having to travel to attend a training course or education facility in person. Artificial intelligence, the use of robots is now commonplace. They're replacing people in distribution centres and in all areas of life. How can we tax them? And how best can we tax them? Home gym equipment. There's been a surge in consumption of home gym equipment. But perhaps this would be better tackled with a high rate of VAT. Domestic pets. We've seen another surge in purchases of domestic pets as company for people working from home. Digital services. This is a very difficult area to tax and has been the subject of discussions around the world for a couple of years. Mobile phones, despite the positive externalities on the use of mobile phones in emerging economies, some governments have taxed them. For more information, see ITIC paper, Approaches to Taxation of Telecommunications Services. Then we have some other things that are usually exempt from VAT. Insurance and financial services. Are these ripe for excise taxation? Land and property taxes. Land and property ownership is usually regulated and often subject to tax now, but can the tax rate be raised, at least for the more expensive properties? Inheritance tax, another controversial area for taxation, but a certain source of revenue. The phrase that the only certainties in life are death and taxes springs to mind. Professional services, private healthcare is often exempt from VAT. This would be a controversial area to tax, potentially lucrative though. And finally, in some US states and in Canada, they've legalized and taxed marijuana. But if a government decides to do this, the tax rate would probably need to be low if consumers are to be persuaded to move from their illicit supplier to a legitimate one. Next slide, please. So, when considering new or increased excise taxes, there are definitely opportunities, but it is important to understand the potential benefits and risks of each one. And when I'm talking about principles of taxation, I'm referring in particular to Adam Smith's canons of taxation: proportionality, certainty, convenience, economy, and productivity. Perhaps proportionality doesn't apply to most excise taxes, except where luxury goods are taxed, but I think the other canons can and do apply. And it's worth considering also the more recent recommendations by the IMF, the World Bank, and others in favour of broad-based, low-rated taxes, which of course, to my mind, favours VAT rather than excise. As far as excise taxes are concerned, there are also a few principles to bear in mind. To be approved as an excise operator should be a privilege, not a right. So only fit and proper persons should be authorised as excise operators. And because they are usually allowed to produce, store and move excisable goods tax unpaid, they are required to have robust physical security in place and to provide financial guarantees to cover the risk of loss to the revenue, such as through fire or theft, say, of a tanker full of alcohol. So already you can see there are quite a lot of differences with VAT. Excise taxes work best where there are few producers, taxpayers to monitor, and the products concerned have few ready substitutes, are relatively price inelastic, and have negative externalities. Until the advent of innovative products such as HNB cigarettes and e-cigarettes, tobacco products met these criteria. Soft drinks fails the first two criteria, and the last criterion is hotly debated. Telecoms has been proven to have positive externalities, but has no substitutes. So is it sensible for developing economies to tax them? I'd like to finish by reminding viewers that a key area not covered in today's talk is that of illicit trade, which is a sad consequence of putting a very high rate of tax on products that are either potentially addictive or indispensable. Some consumers, especially in the areas of low economic income, provide a demand for cheaper if illicit products, and international criminal organizations are only too ready to take advantage. Again, this is a complex subject worthy of a paper and webinar on another occasion. It is possible to levy high taxes on excise products and manage to restrain illicit trade to an acceptable level, but it takes a lot of effort, skilled resources, political commitment, intelligence, and a trust in government. The post-COVID fiscal environment needs a sustainable approach. There are opportunities for higher tax rates on more harmful products to raise tax revenue and discourage consumption, alongside new lower tax rates on less harmful substitute products to encourage consumer switching. Combustion engines to electric cars, sugar-sweetened beverages to sugar-free drinks, smoking tobacco products to the healthier non-smoking products. So there are indeed opportunities for new excise taxes and raised tax rates, but there are also a lot of potential consequences to consider. Thank you.
Liz, thank you for that excellent overview and that really balanced look at areas in which governments can impose new taxes or tighten existing ones. And you also illuminated some of the practical concerns and considerations that need to be taken into account. And that will be very important moving forward. So we do have a few questions here. The first question is, how do excise taxes relate to VAT, and how do they also relate to import duties?
Right, well, excise taxes are domestic consumption taxes, so they apply only in the jurisdiction of consumption. Imports of excisable goods may be subject first to import duties, then to excise taxes, and finally also to VAT. So if excise goods are the subject of smuggling and the government of the country concerned loses any import duties, they'll also lose excise taxes and they'll lose VAT, because VAT is charged on the value of the goods at import plus import duties plus excise tax. So they lose not one, but three taxes, a lot of money. When you think of how high excise taxes usually are, and many countries now have VAT rates of 20% or so, so that's a lot of money.
Mm-hmm.
And there are a lot of links between the taxes, which is very useful as far as administration is concerned. I can remember being told by Seth Turkpa, the previous finance minister in Ghana, that a simple comparison of imports over the year with the name of the business receiving the imports, comparing that with the VAT register, managed to find them a lot of businesses who had not registered for VAT, and as a result, they managed to increase their revenue by a considerable amount. So there are links, and there are links, of course, with VAT, as I've mentioned. So it's important to look at indirect taxes across the piece and have that information available for analysis, both of trends and to see, whether someone is trying to evade one or more of the taxes.
Wow, very interesting. Now we have a second question here. And the question says, an important takeaway from your paper is that excise taxes generally do not impede investment, provided they are implemented effectively. So generally speaking, what sorts of things should governments avoid when they are creating excise tax regimes so that they can promote a healthy environment for investment?
Okay, well, this is not necessarily something to do with how excise taxes are implemented. But I know from reading some of the work of Professor Knosson that it is understood that excise taxes do not impede inward investment because they're not taxes on company profits, they're not taxes on income, and they're not taxes on broad-based consumption products or necessities. So for that reason, I think the tax theorists believe that they do not impede economic development. But I know also that companies have told me that things that they really don't like, that may put them off investment, are things like a high level of corruption and patronage in the country concerned, a lack of transparency, uncertainty, predictability about tax changes, as I believe some countries merely announce the legal change and expect companies to be able to comply, etc. So they don't get much chance to prepare. So it's a lack of consultation with industry as well, so that governments are fully aware of the implications for industry, for employment, of taking taxation decisions. And of course, in some countries, there have been provisions of relief that do not apply across the board, are considered to be unfair, and even failure to impose penalties, failure to administer taxes robustly or fairly, that can put off investment. Although I have to say that where a company sees a growing market, I'm sure that they will try their best to get a foothold in that country.
Well, you provided some really excellent food for thought there. Now, moving on to our third question. You say that the success of excise tax policy depends on effective administration and also enforcement. Can you share with us what makes administration of excise taxes different from that of other taxes?
Well, I guess I would say that, wouldn't I, given my background has been more on administration and enforcement than on policy. Excise taxes are different from VAT and direct taxes in that they usually apply primarily to highly priced, desirable products that can be the subject of illicit trade. So the administration and controls required reflect the need for excise operations such as the manufacture, storage and movement of taxable goods, tax unpaid, to be conducted only by fit and proper persons, as I mentioned. So, and using premises subject to high levels of physical security, with operations subject to financial guarantees to cover the risks to the revenue. Controls have to be a mixture of both financial audit controls and of physical controls, such as unannounced physical checks and credibility assessments. Now, think briefly, if you were a criminal and you wanted to sell some of your production off record, tax-free, and make some money on the side, when would you be doing it? You wouldn't be doing it between 9 and 5 Monday to Friday when officials are likely to be in the office turning up or whatever. You would be doing it in the evenings and at weekends. And that's why unannounced physical checks are important. So it's very different from that. And also the legislation needs to allow for seizure and destruction of seized goods. Sometimes goods that are seized are put back on the market. They're auctioned off to make some money for the government. So you see second-hand equipment used for, say, producing cigarettes back in use, simply because it's been sold off second-hand. So talking about quite severe legislation, which often provokes some feedback from civil rights people and people who are concerned about officials hammering on doors in the middle of the night, etc. We are talking here about production premises where they would have the right to enter, etc. So it is very different from that point of view, where we're talking about specific tax structures. And those conducting audits need to understand the risks to the revenue inherent in the manufacturing process itself, and to understand the methods used by the illicit traders so that they can adopt a risk-based compliance management, very much more like customs compliance management than direct taxes. So it's a combination of the customs controls and the financial audit controls that's required. So that is why it is specialist, in my view.
Very fascinating. Thank you for that. Now, Another question we have here. An important point from your paper is that governments need to gradually introduce excise tax measures to prevent shocking consumers into buying illegal substances. On the other hand, some governments may have a pretty pressing need for revenue post-COVID, and they may not feel that there is time for gradual rate increases. So are there ways to reconcile these two interests?
Well, I wish there were, but as you say, the two interests diverge. But if governments understand the rationale behind advocating gradual pre-announced increases in taxation of a product and the risk of generating illicit trade as a result of creating demand for a cheaper, desirable product and providing criminals with more attractive profits, then they should realize that gradual increases in tax are best. One thing that experience has shown is that once consumers have a reliable source of illicit products, they don't feel that it's any threat to them, they are happy with the product itself, they're not so likely to turn back to the legal source of supply unless it is taxed at a reasonable rate, or there is some other mechanism to attract them back.
Very interesting. I did not realize that once people tend to shift towards these illegal products, that it's hard to get them to move back into the more mainstream.
There's an interesting example which happened in the alcohol sector in Kenya after some consumers of illegal products died. The government introduced a low tax beer, and because it was low tax and because I think consumers may have been shocked by the deaths, this turned out to be quite a successful move, and consumers did buy the lower tax product. So that's one example, which I can't remember exactly the details, but I can send them to anyone who's interested.
Oh, wow. Really, really great anecdote there. Now, moving on to our fifth question, how can compliance with excise tax legislation be improved so that the tax gap is minimized?
Okay, well, this is worthy of a webinar on its own. There are many reasons why taxpayers don't comply. And the first step in reducing non-compliance is understanding the extent and nature of the tax gap. Once you have a reliable estimate of the tax gap, that's the difference between the tax that you should have collected and the tax you have actually collected. Once you understand, you know how big it is, and you can analyze why you have not received that tax, then you can start to develop strategies and actions to counter that. This is one of the things that we did in the UK. We started off in the 1990s with, at the end of the 1990s, with a spirits tax gap. And now HM Revenue and Customs publishes annually tax gaps for all the taxes. And also the analysis which shows which sort of consumer it is it business, is it personal, even down to I think the region. So this is all published in a lengthy tome, available on the web, so it's easy to find it. And one of the things that we did very successfully was to reduce considerably the amount of non-compliance, which was due to errors and confusion and mistakes, by simplifying a lot of our forms and the information we provided about those forms, and testing that information with focus groups of real businesses, small businesses, and in particular, I mean, this is usually a small business issue because big businesses pay accountants to deal with the tax returns for them, and they tend to get them right. But the smaller businesses have to do everything themselves or pay an accountant. So there's lots of confusion usually. With the excise taxes that bear most heavily on a few producers, it's not such an issue, that sort of compliance. The main sort of non-compliance with excise taxes is the outright illicit trade.
Well, it's great to see that the UK can be held up as an example for other governments that are also grappling with this issue. And so moving on to our final question, can tax stamps help reduce illicit trade in excisable products?
This is another controversial area.
Mm-hmm.
Whilst those who market the tax stamp systems would disagree, my personal experience and opinion is that mandating a tax stamp system has many disadvantages. Illicit goods travel across continents. Counterfeits of most of the state-of-the-art tax stamp systems seem to be produced within a very short time. It's true that revenues may rise for a year or two, but then criminals perhaps adjust their methods and consumers realize that there isn't very much in the way of enforcement at the retail side, and the revenue goes down again. So I think that if you take on a tax stamp system as a revenue authority, you end up having to police not just the tax, but also the tax stamps. And I think also that nowadays, because for the large firms, it should be possible to have direct access to manufacturing data electronically without having to sort of step out of your office if you're a revenue official. And it's possible to audit computer systems if you've got the specialist knowledge. We have blockchain coming in. We have the World Customs Organization and customs authorities around the world authorizing authorized economic operators for customs on the basis of the security of their supply chains. So I'm thinking that tax stamps are possibly just becoming yesterday's technology anyway. But I'm firmly convinced that tax stamps are no substitute for good, solid administration and enforcement.
Very insightful and keeps in line with the entire theme of today's presentation, which is that effective administration and enforcement is very key in implementing a successful excise tax regime. So that ends our time today. And again, Liz, I just want to thank you so much for your time and for your really fascinating presentation. And for the audience, I just want to note that you can find Liz's paper and the rest of the series published on the Tax Notes website and also on ITIC's website. And I also want to extend many thanks as well to ITIC for putting all of this together and for making all of these expert papers available for us to enjoy. So to all of our listeners, thank you again for attending and enjoy the rest of your day. Thank you.